Reduced tariff-free steel import volumes 50% above quota duties, melt and pour rules, and the panic instilled by provisional tariff-free quota duties. This is the Speaking of Steel podcast, and today we've assembled a team to assess the fallout from the UK and EU's new trade defences on steel imports. We've got a trio of market analysts from MEPS International joining us today to discuss these new measures. On my left, we've got Jon Carruthers-Green. Jon, welcome back to the studio.
Hi Tom, thank you for having me back. One of my favourite topics.
Of course, second favourite.
Second favourite.
Adam Crookes, welcome to the studio. It's been a while since we've had you in.
It is, thank you for having me back. Yeah.
Great
to be
stuff.
here. Yeah.
Good to see you. And joining us remotely from London today, not from Valencia, I gather, Benedicte Mikolajczak. Hi Benedicte, how are you doing?
Good morning, fine, yes, and thanks for having me again.
Great to see you. Lots to discuss today, but we are going to kick off with Jon, just to give us a bit of an oversight, really, initially, of the background to this relaunch or reimagining of the trade defences for steel in the UK and initially the EU. That's what we'll be discussing first. So, Jon, what's happening here? What's the context to what we've seen in recent weeks?
Okay, so for the past 8 years, we've had the steel safeguard measures applying quotas and tariffs to material coming into both the EU and the UK. We've kind of got used to those now. We've had volumes which were sort of around about 33 million tonnes into Europe. If steel sort of comes in above that, then you get the 25% tariff. Now, of course, that 33 million tonnes is split between a whole bunch of different products and a whole set of different countries. The problem with a safeguard mechanism, safeguard trade defence, is that it's a World Trade Organization agreed measure. There are some very set rules about how you implement it. And one of those rules is that after 8 years, it must expire. So legislators in Europe, in the UK, have been trying to come up with some new measure that we can have that's going to still protect the European steel industry. What they've kind of said is, instead of protecting against steel that should have gone to America, which was the initial justification, which is now going to Europe, well, these new measures, what they're really targeting is global overcapacity. And these new measures really are a lot more broad than was previously applied.
Okay, in both the EU and UK?
In both the EU and the UK, okay. There's some fine detail about how the two measures are ever so slightly different, but as a broad ruling, think reduce quotas, increase tariffs. Absolutely,
because, of course, before Brexit, these two sets of safeguard measures, as they were very closely aligned. So we've seen some key changes, which we'll get into.
Yeah.
Thanks for that quick look at that, Jon. We'll be focusing more on the actual structure of the changes and the differences as we go through the podcast. But first, I'd like to come to you, Benedicte. We are going to talk initially about the EU changes, moving on to the UK a little later on in the podcast. Your research, Benedicte, focuses on Southern Europe primarily, steel market participants in Spain, Italy, and France as well. Can you briefly share some of the effects that we've seen in recent months with just the knowledge that these trade measures are changing? Have they created a significant amount of uncertainty among the research contacts you speak to?
Yes, uncertainty is definitely the word of the last few months. And now, we know the rules of the games, at least for the new tariff quotas. And market participants I have spoken to since these individual quotas have been released feel that the restrictions are much stricter than they were expecting. Because when you apply CBAM and anti-dumping duties and you take all that together, part of these quotas are not usable. If we take the hot rolled coil, for example, there are anti-dumping duties against Japan, against Brazil, against Egypt. So these quotas are not going to be used. And then some countries have seen, I mean, that was expected. Some countries like Turkey and India have seen, I'm talking about hot rolled coils, which is the most imported product, have seen large reduction in their allocations. But they are not as bad as other countries, such as China, which has seen a huge decrease in their allocation, and I'm mainly talking about the galvanized 4B category. So importers feel like some origins have nearly disappeared, and they when people started diversifying their procurement. After the first safeguard quotas were installed, and they started importing from Algeria, Saudi Arabia, Indonesia. This is now no longer possible. They're saying that, and because custom clearance has already happened since the 1st of July, and where we're seeing, for example, that the Turkish quota is full for a number of products, flats and longs. But looking at hot rolled coils for example, from Indonesia, the quota is so small compared to what was imported last year, which was about 400,000 a quarter. And I think the quota is about 30,000 now. So this is kind of going to be, Indonesia is no longer a possibility. Then Saudi Arabia, they say the quota is too small. It doesn't even cover one shipload. So the Saudi quota is not going to be usable either. And Algeria is also going to be a problem because a lot was bought from Algeria. And now buyers are expecting quota duty of 45%, considering what was bought. So importers are feeling that they are facing additional problems. And they still don't know what CBAM, the verified values of CBAM are going to be and when this is going to happen. So there is a feeling that it's going to be more and more difficult to import. And some are just saying, yes, we might be able to import maybe from Turkey, maybe from India, maybe hot rolled coil from Vietnam, not galvanized from Vietnam, because then you have CBAM, because Vietnam for galvanized product is mainly re-rollers, and then you have CBAM coming into play. So I think the traders, the importers are realizing that the risks are going to be much higher.
And where does that leave the supply situation, Benedicte? Because clearly in the European Steel Review, the research has sort of indicated that procurement has slowed down coming into the introduction of these new measures. And it seems that inventories might be high, am I right, at the moment? But I guess equally, these restrictions that you're talking about are really going to constrain supply in the medium term.
Absolutely. So supply is going to be much tighter. But not now, because there is a kind of buffer, because demand has been weak. There is still a lot of stock in the supply chain. So we're not seeing that supply being tight right now, but it's something that is expected to happen within Q4, when the stocks are finally being used. And also, importers are now looking at what they can custom clear. Apparently, some custom clear material until on the 30th of June, paying 25%, because they were thinking, well, that's better than having to pay 50% in July. Some were hoping, so they think that material could be kept in port even until the 1st of January 2027. And then there is a revision that's going to happen then. But I don't expect the revision to change very much because European mills are expected to increase their capacity utilization, and they have already started to put more capacity on stream in different plants.
Yeah. Well, thanks for that, Benedicte. Great summary there, Jon, of all the mechanics of the market, supply and demand in particular, and some of those quota changes. You've been looking specifically at the legislation and looking through the spreadsheets as well. There looks to be a lot more complexity this time around. What are the key sort of points, the key changes that you've pulled out?
So just before we get to the key points, I'd just like to double down on that uncertainty idea. The final rules for the game, for the EU quotas, we were given 1 day's notice to really understand all of this, which I don't understand how how the Commission can expect industry to react that quickly. It's crazy. But anyway, some of these changes that we've seen, because this is not a safeguard measure anymore, and the new name now is steel regulation, the rules have changed slightly. What we've seen is these quotas come down for a lot of countries. The overall quota volume was slashed from 33 million down to 18 million. The idea being this was to get us back to a period before this overcapacity really sort of kicked in. So the EU took figures from 2013, I think it was, and trying to apply these quotas based on those volumes. But I think the key bit isn't necessarily that the quotas have changed, but fundamentally how the quotas are allocated has changed. So previously we saw countries getting a country-specific quota, or they were kind of lumped into one residual all others quota. There was no delineation really between what decided whether you were getting a country-specific quota or going in the others, other than your average quota volumes. Now it seems that there's a whole range of different measures that are going to be applied. So just looking at sort of some of the lists that the Commission have cited, they're going to give preference to countries where they have a free trade agreement with the EU. They're going to penalise countries that use trade distorting non-market support. They're also going to apply their WTO obligations. They're going to look at any agreements that are made between countries on global overcapacity. So what this really does is it gives the Commission like a lot more flexibility in deciding these quotas. And as Benedicte said, we're expecting these to be revised fairly regularly. Not just the quota volumes, but then further on how we actually deal with how these quotas are allocated. One of the key bits that we really need to focus on with these free trade countries is they each get their own country-specific quota, but then there's also an overflow quota. So if a country that has used up their allocation still has material to bring in, there is this one pot for free trade agreement countries that can then be used. Now, hot rolled coil, we kind of expect this to be used or attempted to be used very quickly by countries like Turkey. Already, they've used their own quota. We were looking at the figures just this morning. Currently, nothing's been allocated to this overflow quota, but the question is that just because it's brand new and we're still working through the sort of the fundamentals of how it's applied, or are these importers having to specifically apply the material they're bringing in to this overflow quota? Still very early to sort of tell exactly how that's going to play out, but that second bite of the cherry is there for free trade countries. What we've also seen is some countries getting a larger allocation than they had previously. Now, this specifically applies to countries that were in that all others category before.
And this is despite the overall cuts.
This is despite the overall cuts, yes. So countries like Japan, I know Benedicte mentioned they would still struggle due to other duties to use that quota, but their quota has actually increased. Same for Taiwan. So there are some countries that are getting sort of this bigger share of the pie, obviously at the cost of other countries.
Okay, so one of the main talking points in the run-up, another introduction into this legislation was a melt and pour rule as well. how's that going to play out?
Okay, so currently the quotas are allocated based on, as I said, historical trade, whether this country has a free trade agreement with the EU or not, and a whole bunch of other factors. What importers are going to have to do from October the 1st is provide evidence of where the material was melted and poured. By October 27, I think it is, that evidence will be considered when it comes to allocating quotas. And by 2028, the Commission has committed to fundamentally reassessing the quotas and seeing whether this melt and pour information, where the material originated from right at the back when it was first sort of melted, they're going to decide whether that should be the overriding principle for sort of deciding the quotas. So there are changes to the way it is going to be allocated. There will be future changes, and melt and pour is going to become an increasingly important one, especially when we consider things like CBAM as well, where that's going to become a key factor.
I was about to say that melt and pour is going to take some policing, isn't it? You know, we're already verifying CBAM measures,
Yeah.
and now they'll be trying to look at.
So one of the things that we don't quite know yet is what evidence will be allowed under these melt and pour rules. There's been a consultation that's gone on. It finished, I think it was the 2nd of July. So the Commission's invited the whole of industry to submit their thoughts on what should be included and what shouldn't be included. We're expecting an announcement on that in the coming weeks.
Okay, thanks, John. It's a great oversight. Do chip in if there's more. I did want to ask Benedicte as well, just about the expectation really of market participants, MEPS contacts in the market. What do they expect changes? Do they expect things to free up again in future, or are they now adapting to the new normal as they see it, Benedicte?
I think they don't really have a choice. And in Southern Europe, where we have large service centres, importers who have based their strategy on imports, and they are kind of looking at ways that they can still import. And there are some possibilities, as John said, FTA countries have a better deal, so it might still be able to do deals with, Turkey and India, even though their quotas have been reduced, and some other countries. But then they also have to play with CBAM and with anti-dumping. I think as a result, they do expect to have to buy from Europe more, but then obviously at different prices. And I think they do expect a new era when prices in Q4 are going to be higher, significantly higher. I mean, mills got off the market after the announcement, so there aren't any. Well, I think on the 1st of July there were still prices. I mean, I'm talking about coil prices. Prices continued to slide slightly during June, and then on the 1st of July those prices were still valid, and then most mills got off the market. And I think market participants, buyers now expect increases, maybe not too much first because of the level of stocks. But by the fourth quarter, they do expect prices to increase more significantly.
And do you think, will these measures actually allow the mills eventually to increase production? I guess that's the aim, isn't it?
Yes, and they have already started, and more production is supposed to come on stream, where, for example, La Magona in Italy. Yes, I should think that mills should be able to increase their production because imports are going to be much more reduced. But saying that, I think mills in third country mills are still eager to deal with the European Union. So, and some importers are still eager to import, so they are looking at how they can do it, what the risk is, But I think there will still be imports. It's just going to be much more difficult, and maybe traders, large traders, we specialize in it, taking more risks. But I mean, I spoke to a large service center in Southern Europe, and they were just looking at, there are countries where it's still possible, even taking a higher risk, but then the price difference is still there. I mean, DDP offers were not very attractive, but now, because everybody's readapting to the new system, even players in Turkey, in Vietnam, they are adapting to the new system and giving prices which could be attractive to the European importers.
Yeah, it's a change in makeup, isn't it? The supply chain. I guess that's the key takeaway, John.
I think that's a key point. It's we're still going to see these imports. We're going to see them at a lower level, but we're going to see this increased risk. You don't know necessarily just how much the tariff is going to be. Certainly in the sort of the early stages of a new quota, a new quarter, where that tariff is potentially shared by others. We've seen some people that have brought material in just in these first few days, trying to calculate what their share of this quota is going, this share of the quota and share of the tariff is going to be, and the data that they're getting is getting updated sort of day by day, and it's really going to be an opportunity for some people to bring this material in, but like I say, at sort of a much higher risk. The kind of figures that you're looking at, you've got to apply that bigger margin of error.
Right now, the measures have just come in. It looks like a high-stakes gamble, doesn't it?
It does. So, I mean, Turkey is a really good example of this. That's why we keep going back to it with hot rolled coil. We saw on the first day that the quota had been exceeded. We saw on the second day that had gone even further. And today, when we looked at the figures, that even higher still. Now, if you're calculating your share of the quota based on figures from a day or two ago, then that potentially throws a huge margin of error into things. And we've got to consider at the start of this quota, we have the blocking period, where essentially we're saying anything that comes in those first few days counts as if it came in on the first day. So you've really got to be careful and get your sums absolutely right.
Yeah, absolutely. Huge risk. Listen, we're going to leave the EU quota discussion there for now. I think it's really interesting. Some great insight from you, Benedicte. Thanks for sharing your feedback from market participants. That's fascinating stuff, and really does give a little bit of an insight onto the complexity of what we're going to be covering in the European Steel review in the months ahead. Really interesting times for the European steel sector. We are now going to talk about the new UK measures and how they differentiate, the complexities of those. But we'll say farewell to you, Benedicte. Thanks ever so much for joining us. It's been a pleasure.
Thanks for having me.
Thank you. So it's time to welcome Adam into the room.
Hello again.
Adam, well done. I know you don't like to sit quietly for too long, so that was a bit of a challenge for you. But clearly, we're keen to get into the meat of the UK measures and how they differ. What we're starkly aware of at MEPS was the fact that the UK government or Department for Trade and Business released provisional tariff rate quota volumes earlier in the year, the end of March. And that really sparked quite a lot of panic and concern, didn't it? What were you hearing from your contacts in the market?
I think, as you discussed in your podcast when you had Gareth Stace on and Godfrey Wattin, it was, I think, frustration and perhaps even anger from some market participants about securing them supply chains going forward. You know, end users are concerned that they can't get UK produced steel, and that was going to put pretty much 50% on their cost to produce whatever that finished good is. And with the current market and economic picture, it's just not going to be accepted by end users, and that's the real concern. And I think that's the key difference between the UK and EU is in the EU you've still got choice of supply. You've got mills in different countries and different regions offering different products. We don't really have that in the UK, and I think that's the concern.
Yeah, I think the lobbying that we saw largely after that initial podcast, actually, with Gareth Stace and Godfrey Watt, it was intense lobbying, but what you saw is that the steel supply chain, the traders and the importers were actually coming together with end users, weren't they? There was a real concern about deindustrialisation and a lack of supply. I mean, is that something that you saw reflected in your conversation?
Yeah, definitely. And in the, I do cover some Northern European areas as well, and that's, a similar theme there as well. But I think even more so in the UK, we've got Tata, who really don't have a furnace at the moment, and that's going to be delayed by at least 18 months. We've got British Steel, who are sort of in the midst of nationalisation or not. So that's, again, another uncertain supply route there. So if they can't get UK produced steel, where are we going to get it from? I think it was the main question, and what people were saying to me, and they just really can't afford to pay 50% more.
Yeah, absolutely.
And to be absorbed in at the end of the day, it'll come down to the end users, and you'll see your price of your finished goods increasing.
And with the fragility of the economy at the moment, we can't be doing with any
It is on a knife edge already, I think. Yeah.
There you go.
Yeah.
So, John, you heard what Adam said there. You've already been part of the discussion in recent weeks. Did the UK government respond in the measures that they ultimately brought forward?
They did, and they gave us 5 whole days to understand it, as opposed to the EU giving us just 1 day
Generous.
to get those figures. I think the key points, though, like you say, is the fact that those provisional figures, which there was so much strong reaction to those. And the reason for that was because some of these quotas, let me look at those provisional figures, they were coming down 80, 90, 97%, I think was the largest one. And once you go beyond that quota, of course, that's when the tariff kicks in.
Yeah.
Also, some of these quotas were being applied to material we're not producing here. So immediately, you can't use the quota, you pick up the tariff. So, of course, there's widespread concern. And there has been some changes to these quotas. They haven't come down quite as much now. So I think when you look at the overall average, they pretty much halved compared to where they were before. But once again, some product categories, some countries have seen a much lower reduction than others. What we don't have in the UK is this additional complication of the free trade country additional quota. Essentially, you're very similar to the previous structure. You either get a country-specific quota because your imports are over a certain percent, or you're sort of grouped in with the all others.
Okay. So I was just going to mention the fact that there was, alongside this slight reduction in the cuts to the tariff-free quotas, there was talk of a transition period which would ease the burden for importers.
So what we got a few weeks before this was we got confirmation that any material that's ordered before the 14th of March and arrives in Q3 won't count towards any quotas, won't pick up any tariff. So yes, I mean, there was clearly some kind of reaction from the UK government because they put out that individual notice before even coming out with the quota volumes. But clearly, I don't think the industry as a whole has been listened to entirely. Yes, these quotas haven't come down as much as was first feared, but there's still some really large cuts. And I still think there's a lot of concern that those cuts are too big, that those cuts are going to have effect, that we are going to see companies really, really struggling, if not.
Yeah, that's what worse. People have been saying, through our monthly calls. I think that's been reflected, and it's difficult because it's perspective. Some products are okay, current demand, they can manage. Others, we don't produce it. There's no material, so what's the answer? And I don't think anyone knows that, and that's the problem.
Yeah.
And some of the numbers in the calculations that the UK government put forward, it seemed to suggest that they were based on potentially future steel making capacity in the UK. There's a sense that it's not quite there yet, as you've already said.
Yeah, it's all up in the air, isn't it? Tata their furnace will be delayed by at least 18 months. I think there were talks with nationalising British Steel in Scunthorpe, but then their transition to electric arc furnace, I think the National Grid can't supply until at least another 2-3 years or something, I think it was. We've got Liberty or Speciality UK, not Liberty anymore, who aren't producing. These 2 arc furnaces start doing nothing there. So there is opportunities to get these facilities back up and running, but I mean, it's years away, probably, at the best.
Yeah, yeah. And John, is there an expectation that in the UK, especially, the heightened exposure to those above tariff quotas is really going to push the price of steel prices up? We've already seen it, in fact, haven't we? The UK steel prices have risen above those of mainland Europe.
Yeah, we saw that pretty much perfectly timed with the provisional figures announcement.
Yeah.
There was a big jump on certain product categories that month. These rises have been strong through the first half of the year. We've seen a little bit of a tapering off this past month or two. Are we getting into the summer period where there's less demand? Is there generally sort of a lack of demand, fundamentally, that'll stop these prices going up so much? But yes, we have had a look at some of the differences in prices, and we are expecting the UK prices to be above this average in Europe. Yeah, we're expecting that for the rest of the year. And once we get a bit more data in about exactly how these quotas are being used, we'll come along and tweak those again. But yeah, we're expecting some product categories to be significantly higher than the European average.
Yeah, okay.
But I think just to add, Adam made a really good point there about tartar and its mills being offline. So one specific quota that I think is worth pointing out is the hot roll coil authorised use quota. I'd have looked for the right word there. What we've got 2 different hot roll coil quotas. We've got one for hot roll coil to be used as hot roll coil, and then we've got a separate quota for hot roll coil for these authorised use applications, essentially to be transformed into something like hot tip galvanised coil and tubes and pipes to be processed further. Now this one works a little differently to all the others. There's no country specific quotas for that. What we've got is the one global quota, and then within that, any country that can bring this in is limited to 40% of this quota. And I say this in relation to tartar because this is essentially there to replace the material that could otherwise be produced at Port Talbot. Just like the EU, the UK is committed to revising this trade measure. So potentially, once the Port Talbot site comes back online, we could see this one going all together. Now that's important because that's also the most generous quota out there. That one was the only one that didn't see any sort of significant reduction. That's pretty much the same as it was for the past few years. So that could be a key change in the next couple of years. Yeah. As soon as this supply does come back online, that quota gets removed. So don't get too used to it.
And any melt and pour provision in the UK rules?
So melt and pour, I don't think is perhaps the most sort of important part. One thing that I really sort of pulled out as being sort of a really key difference was, did you know you could get charged bringing steel in when there is still quota left?
No, there you go. Tell us about that, John.
Right. So you can use your quota without any interaction with HMRC up until the point where it gets critical. So when it gets to there's 10% of this quota left. Then at that point, in order to get your material to clear customs, you've got to pay the 50% tariff. If we find out by the end of the quarter that quota hasn't gone over its limit, you then apply to get your money back.
Right.
So essentially, what we're doing,
we're talking about this in the office, where it's effectively 10% lower.
Yeah, they're 10% lower, and you've then got to, like I say, you pay your money. You will get a refund if it's not fully used, but that's money that's out of your cash flow for 3-4 months while it's paid for, and you don't know whether you're going to get it back. Now, okay, that's not going to be the case for everyone, but it's just a crazy one where you're having to pay the tariff while there's still quota left.
Especially for stockists whose liability has risen anyway with the rising prices.
Yes,
Yeah, astonishing. So all this is playing into a backdrop of a market also in the UK. We've talked about the steel prices going up. We're expecting CBAM as well in January in the UK.
Yeah.
While that's not the topic of this discussion as such, I mean, Adam, that's another added concern for people buying steel and another supporting factor for prices.
Yeah, it really is. And we've seen a little bit of positive is not the right word, but maybe a reaction to the quotas. And people know the game, they know the rules, so they've maybe placed some orders. You know, traders or stockists, whoever, have looked at the numbers and think, well, we can work with this, we'll get what we can while we can. However, that time frame is probably quite short, because if you look at lead times from the Far East or Asia or wherever, people want to avoid CBAM at the minute, so they were trying to get clearance before the end of the year. Now, if you think we're in July, if you place orders maybe August, September, that's probably going to be it, realistically. So maybe it will restrict imports even more while we have this uncertainty over CBAM, as we saw in 12 months ago in the EU. It's what we saw, you know, people just avoided imports. So it is another factor, it's another complexity. People are, I wouldn't say burying their head in the sands about it, but people are kind of, I guess, like they did in the EU, avoiding it while they can.
Absolutely, John. Yeah. I guess really this is the case with both measures. Huge restrictions, huge headache, and potentially huge cost liability going forward.
Exactly, and you've got to consider all of these things in tandem. You can't just think about anti-dumping or import tariffs or CBAM separately, because they're all going to apply a cost, and it's going to be dependent on country of origin. It's going to be dependent, in CBAM's case, on specific mills once they get verified. So it's importers are going to have to look at this sort of holistically and sort of try and calculate that overall cost for material coming in.
Yeah.
And when it comes to CBAM, we've got these default values at the moment. We've got these assumed emissions figures which tell you how much the CBAM charge is going to be. This is potentially the only area where I can see the tariffs coming down in the near future, is going from using these default figures to using verified figures. That's really the only area now where we could potentially see a cut in the duties and charges that you'll have bringing material in. So yes, there's a lot of uncertainty now. The rules of the game for CBAM in the EU, in the UK, aren't finalised. They're going to change, just like the rules for this quota.
They'll probably tell people last minute.
They're going to tell people last minute, and these rules are going to change. So it comes back to that uncertainty.
And just to just mention on that, we've been to events and there's been representatives from ports there, and some of their comments were there's hardly any vessels booked for the second half of the year, which goes to that point. So if demand is a big if demand does ever improve, we could really see some shortages, but I mean demand perhaps won't. Which I guess is probably it's never a good thing if demand's weak, but it perhaps is right now.
It seems uncertainty will remain the watchword for some time to come, both in the EU and the UK. I think there's probably just time to tell people that the way to keep up to date with those things, to track steel market prices, the outlook of the market, is in the European Steel Review, where both Southern Europe, Northern Europe and the UK are all covered on a monthly basis. So do keep up with those and subscribe if you don't already. John, thanks ever so much for joining me for another podcast. I'm sure we'll be back soon. In fact, I know you will next month. Something to look forward to.
Got something special planned for next month.
Excellent. Adam, great to have you back. Thanks
you
ever so much for joining us. And we'll leave it there. What a great podcast.
Yeah,
thank you
very much. Yeah. Next time, don't do it after the football.